All right, so here we are. We're talking about taking advantage of the market here and what we call buying the dip, or so to speak. And that's the name of the presentation. But I'm going to go over kind of where we've been and where we're going. We're going to talk about a lot of, during the first 10, 15 minutes, a little bit of base information about real estate investing. Then we're going to go into more of what the market is doing and how we observe markets and how they well, you could predict what's going to happen in the future by studying the past. So a lot of people come to me over the years of doing this for 4 decades. They come to me because I've been doing it for so long, but I have an intuition about what's going to happen in the market. Always been looking ahead. I moved back. I moved here, and actually to Austin, Texas, in 1993, and I bought my first house here. Actually, got into real estate in 1983. I bought my first home in Anchorage, Alaska. I was 19 years old, and I got my first real estate license at 19 years old. So I've been around, I'm an OG, as they say, not an old guy, but the original gangster, as they say, become a good old boy here in Texas, that they talk about. All right, so just a little bit back, around 40 years, 30 in real estate, 30 years in Austin, half a billion in closed sales. Over 120 million of that came in the last 5 years with the pandemic, and the huge amount of influx of properties that we sold to people that were coming and taking advantage of this hugely appreciating market. Obviously, that's switched around a little bit. Top investment broker in Texas, very pretty much best-selling author, huge YouTube channel. Been a speaker all over internationally, and also been on HGTV's House Hunters 3 times. That was a lot of fun, but a lot of work. 12 hours a day, 8 days straight of filming for 22 minutes of film. So got to see behind the scenes what reality TV is like. All right, here's my team. And so you'll see my beautiful wife right next to me, and then Andrea behind her is my assistant. Daniel on the far right is my IT guy, and Lisa on the right, and her assistant on the left, Marissa, are my contract coordinators, and they help keep everything together. And actually, Andrea is the kind of the one that keeps the glue here with keep everybody going. But the cool guy with the glasses back there is my father-in-law, and he is amazing mentor of mine. He's 86 years old. He's still up there kicking. And it's funny about George, my father-in-law. I call him my rich dad because he is. But he's rich. He's rich in character for sure. But he also owns a lot of real estate, which we'll eventually someday get the benefit of. So thanks, Rich Dad. But what's more important is that he's been a really good mentor to me. Actually, he's the one who introduced me to Austin, Texas, all those years ago. I came out here first in the late 80s. Okay, so enough about me. Now it's all about you and all about what the benefits are here and what's going to happen in Texas. Sorry, hope that wasn't too loud. That was my fan here because it is hot today. It's going to be almost 100 degrees. All right, so just a quick for those that have already been in have seen my presentations. You've probably seen this slide, but really just want to remind the benefits of real estate and what it offers investors. So basically, income. It's an income producing asset. You have depreciation, tax benefits, and we're going to cover a little bit of that. Equity appreciation. That's the long-term play where you build up equity over time, always over time in real estate is always going to be, any investment over time is going to be do really well. But in real estate, it definitely is most 85% of the world's wealth got their wealth through real estate. So uh, you can use leverage. So we're only putting 25% down on a property you own 100% of. And then also you get a natural equity growth through for debt buy down. And it's predictable. And I say that with a little grain of salt because it's predictable. It just don't, it goes up and it goes down along the markets as it goes up over time. It's just the time is how to predict those markets and make sure you don't get caught, especially depending on where you're at in your real estate investment life. And then estate disposition, there's a lot of amazing estate tax benefits and things like that that you get pass your property onto your children without having them to pay the taxes you would have if you did it before. So the great opportunity for especially a lot of my folks are in the Bay Area, deal with a lot of medical and a lot of software engineers. Of course, here in Austin, Texas, got a lot of software engineer local investors as well. They're seeking, they've obviously done pretty well in the stock market. They're doing pretty well with their whatever they're doing in the tech world. But a lot of times they're looking to diversify in other, real assets, which is, bricks and mortar. And so I offer that, and I offer a very specialized version of that. Looking for long-term equity growth. We're a buy and hold strategist. We're not a fixer flipper. And we're looking for, maybe somebody's looking for a future retirement home. A lot of times they buy it way ahead of time. Maybe it's a lake house or what have you, and then they rent it out for a while, and then when they're ready to retire, they move into it. Where I have a lot of solutions for 1031 tax deferred exchanges. We'll get into a little bit of that here in a minute. And then looking for tax shelters, and we'll talk a little bit about that, but I do a whole presentation on that. If you want to know about all the tax benefits, I have a whole podcast on that. I'd be glad to talk to you, forward that on. But the bottom line, the tax benefits is you get depreciation along with all the other expenses. There's the new administration with the big beautiful bill brought the accelerated bonus depreciation back to 100%. That was the big deal. I'm not going to spend a lot of time explaining what that means, but it means a big tax savings for real estate investors. And then there's some great advantages to become what's called a real estate professional, which I am, of course, but you don't have to have a real estate license to be a real estate professional. Huge advantages there. Once again, whole nother podcast on that. The state advantages, once again, we talked about that. When you pass your estate on to your children, depending on how big the estate is, you usually pass they get the value of the property as the new value of the property upon your death, so they don't have to pay all the capital gains taxes and depreciation that you would have had to recapture before you passed if you sold it. So also, I don't want to give any tax or legal advice, so please consult your professionals there, as that's not my zone. I'm a real estate advisor. Okay, so this is where it starts. Going to spend just a couple minutes on this. This is the first house I lived in San Mateo, California in 1963. My dad bought this house with a VA loan at $17,000, zero down. He sold it 3 or 4 years later. No, actually, yeah, 3 or 4 years later, and he sold it for 27,000. So, he thought he was doing great. That's a pretty good return on your investment. Problem is, during his life as a real estate attorney, he would buy and sell, buy and sell. We'd lease sometimes, buy and sell, buy and sell. So I just kind of did a journey of all the houses we lived in the last over the time growing up, and I counted up there were 12 houses, and they're all over California and some in Nevada and things like that. Just and even back east where we moved, and sometimes we bought, sometimes we leased. But every home we lived in, I looked them up on Zillow just to see what they're worth now. And if my dad had kept all the properties rather than selling them when they moved, he would have been worth over $20 million. And so that's kind of the what got me started is owning multiple homes and just letting them pay off. And so he was a real estate attorney, passed several years ago, and I was fortunate. He died with no money, and I ended up paying his rent for several years. But that was an honor to do that. And My father-in-law, though, the guy with the glasses in the original picture, he is George. He has a eight-figure portfolio, and he's going. Funny thing, he says he just bought another couple of houses a couple of years ago. I go, George, you're in your 80s. Why are you buying houses? He goes, it's what we do. So, what's one thing that's nice about is to have a passion for real estate, and he certainly has. He certainly passed that on to this entire family of ours. I want to keep on track of my time. Got another 12 minutes into it because we want to get to the meat of this conversation. All right, so he kept his real estate. Now he's financially free, and that is kind of my why. I like helping people get to the point, and hopefully soon in my realm for helping enough people to get what they want, which is a lot of them is financially freedom. Financial freedom is to help more people like that, and I'm going to show you in a second what I'm talking about. Um, so this is Andrea Sullivan. Her name originally was Andrea Galbraith, and she was lived in California. Actually, George, my father-in-law, introduced me to her. She owned a fourplex in Huntington Beach. It was kind of run down, and but at the time it was the late '90s. It was just time where she could be able to sell it. She was moving to Texas to get out of the California area, and had this fourplex, but it wasn't really giving her any cash flow. So she came to me, and I sold her 10. We 1031 into 10 single-family homes here, brand new, and she didn't even have a job, and she was recently divorced. And so I got a chance to visit with her in at right after Christmas this year, and she invited me to lunch and told me that she was so blessed that she was able to become financially free just a few years after she bought all those houses from me, and she didn't have to work again. And so that was really exciting. But this is what I live for: is when I get when I get these. This actually on my Google page. This is Andrea talking. You helped me find 10 rental houses, which were the absolute best gifts of my entire life. Here I was recently divorced woman without a job, and yet somehow you made it possible for me to qualify to buy 10 brand new homes. But and I still shake my head today and wonder how you pulled off such an incredible miracle. Well, that's a whole story in itself, but it was all above board, and we were able to get her all those homes, even though she didn't have a job, through an exchange, tax deferred. Okay, Mr. Bill, I use him all in my presentations because he's a poster child of what I like to do with folks in the Bay Area. This is a house in San Mateo, California, where I was born. He sold this house back several years ago, and we use this as examples too to kind of see where the market's going. Because I've been following this house since for almost 10 years, just to see what the comparison. He's did a 1031 tax deferred exchange and deferred into these 9 houses, brand new construction here in Texas. And so he turned his I think it was 1.5, 1.7 in from one house into 9 houses. And the difference was he was getting, at the time, he was getting $3,600 a month. Probably going to be double that now in San Mateo. But in Texas, as soon as you went from 3,600 with these 9 houses, he went to a gross rent of 13,500. Now with rent increases over the time he's owned the properties, probably 6, 7 years, where he's probably up to 17, 18,000 in gross rental income. So the difference is that you're not having to pay it every month, you're actually getting money back every month. So I just throw this slide in here, not for investment reasons, but just to kind of show you what 1.7 million, that's the one in Guilford Lane there on the left. On the right is what you can get here for 1.7 in Central Texas. That's just a teaser for those that want to potentially think about relocating. All right. So here's my role, and here's what I promise you is that I spent all these years doing the research, learning how to research, learning how to get the data to make sure that we are able to throw the dart in the right place. That is why people come to me. Any realtor, broker can sell you a piece of real estate, but are they a specialist? And that's why I am an investor specialist. In fact, I've got classes I teach to other realtors across the nation about how to become a real estate specialist. And it has a lot to do with just these steps here. Research, acquisition, how to get you into the property, the management, which is key across the time that you've owned the property, and then disposition when it's time to sell it. And we're here for the long haul. So that's kind of, I'm going to kind of break all these down, and we're going to start with research. First of all, this is a chart that I've used for, gosh, since the early 2000s or late 90s when I first started going to California to do presentations. It's gotten quite extended, and I didn't actually update it. But it's for this presentation, but I will for 2025. It's been 3 years since the peak here in Austin, so we're going to kind of actually see the charts. But the coast and and Texas have been on counter cycles for the last 40 years, and so when and it's not always exactly right, but for the most part, when Bay Area is booming, Texas is in the doldrums, and that's exactly where we're at right now. There is very little inventory in the Bay Area. Prices are continuing to go up because there's no inventory. Here we have plenty of inventory, and our market's flat. So there's pretty much your counter to the coast. Now this is an interesting chart I pulled out. As far as the over the last, it's been very consistent, the growth of values for Texas real estate. We usually, typically 5%, 4 or 5% has been the long-term average of appreciation, and that's what I base my appreciation models on. I don't do it when there's 15, 20, 40% appreciation a year. I don't do it when it's flat. Over the years, it's pretty much an average between 4 and 5%, which works out pretty well. We're going to show you that in a second. But I want to show the trajectory of what's happened in the market since 2012. Let's see, since 2012, I was looking at how the property values went as far when did it double? From 2012, it was just over 200,000. It would have doubled by 2019. So about 9 to 10 years, 10 to 15 years, depending on when you get in the cycle, you're going to see a valuations double. So 10, 12 years double in value. And that works out that actually works out very well if you do the math. So then what happens here is we had, of course, the pandemic spike, and then we also had a drop back. But what you're seeing, we've leveled out and we've gone flat. If I kept this line going out here, we would be flat. It's going to continue, but I'm going to show you that over the long haul, this vector here is going to continue to go up because we're already turned the corner. There is a lot of homes on the market, but there's a lot of pent up demand, and everybody's waiting for the rates to come down. And they've been threatening it, announcing it. And September's coming, and the rates. And this happened last year in September. Rates came down, or no, the Fed lowered the rate drastically, 75 points, and all of a sudden everybody flooded back in the market. The mortgage rates only dropped about 0.5%, and that was great enough to stir the market and get everybody excited. But when it never actually was turned into fruition, and the rates pretty much stagnated at 6 to 6.5%, which is where they're at now. That affects affordability, and everybody's like waiting for the prices to come down and waiting for their interest rates to come down. I'll tell you what's going to happen when the interest rates come down. All those buyers are going to flood into the market. People who have been sitting on the sidelines waiting to sell their houses are going to now have an opportunity to finally sell their houses. I'll kind of show you some stats. So here it is. This is last month. So we're always a month behind on our stats with the Austin Board of Realtors. So we're looking at 0% from last year increase or decrease. So it's basically flat from last year. And we're looking at 5.5 months of inventory, which is almost an equilibrium market. 6 months is considered an equal market. I believe we're definitely in a buyer's market. We have way more inventory than we've had. We have 15,360 listings. We have a lot of people taking their houses off the market just because they're not selling. And so they turn around and guess what they do? They lease them. Okay, 72 days on the market, which is, that's a normal market. We've been, for the last 10 years, we've been, used to, 20 days, 2 days, 0 days on the market. And this is an interesting stat though. And this is what I tell my sellers, and this is what there are opportunities come with investing in Austin right now. Is not only we're flat, we've already dropped about 18% from the peak of 22. That's 3 years ago, and now you can get a really nice house for in the threes and fours, but to look at the average closed list price ratio is 93.9%, which means if you list it for 500,000, you're probably going to be looking at more like getting 200. If you list it for 500,000, you should expect somewhere around the 460, 470. Okay, so all right, this is my kind of, I use this house as a test, a litmus to follow in the market because it's my house. It's one of my rentals that I have. Golf course house in the golf course community, Avery Ranch. Owned it since 2005. Paid about 190,000 for it. Nice house, four bedroom, 3 bath, 2,400 square foot overlooking the golf course. And here's kind of what it did, over the last 10 years. We had our spike and then we dropped back down. But if you notice, that vector is pretty much the same again. We're leveled out and we're going to go back to consistent appreciation. No big spikes. It's not going to drop anymore unless something really weird happens. We got too much income potential in this town. Everybody makes over 120,000 a year pretty much. So there was plenty of income ability to be able to buy when they get the interest rates down if they decide they want to do it. Then we compare that to, and the reason I do this is just show you Texas is a more stable market over the time, except for that one time in 21, 22. So it's a stable market pretty much. That's why it's a flight to stability, and that's why, because the Bay Area is much more volatile. So I go back to Guilford Street, Guilford Avenue, Mr. Bill's house that he sold, 1,180 square foot, 3 bedroom, 1 bath. For one, it's listed right. I mean, its estimated value is 1.7 right now, and so this is the chart for that house going back till 2016, 10 years or so, and you can see huge swings. And even I didn't realize, I mean, it got up to over here almost 1.9 million, but it dropped another 100,000. I mean, you're seeing it goes up to almost 1.9 million in 22, and then went down to 1.4, 1.5, and then back up to 1.89, and then very volatile. Mr. Bill sold it back to do his 1031 exchange back in 2019, where the dollar sign is. That was, I think, 1.4 at the time. 1.42 is what I think he sold it for. And so yes, he would have done well if he waited, but if he waited and wanted to sell in 2020 before the big boom, he would have lost a substantial. I went from 1.4 that he paid for it down to $1 million. So much more volatile market. All right, then we start looking at first research. Oh, let me talk about that. The whole thing is that every market's different, even in Texas. So you really have to have a researcher that's the broker, investment broker that knows how to research these things, even in our submarkets and watching what's going on in the other markets. This is what's going on because the interest rates are high, the prices are high, cost to rent is much lower than the cost to buy. There's your dynamic about affordability. So we feel as investors, we feel that cost to rent section there because we're able to buy our houses and be able to cash flow them at 25% down, maybe $1,900 a month for rent. And then if you wanted to buy that same house, it would be for a regular home buyer, it'd be $2,700 a month to own it. So you can see that the affordability, people are deciding that's another reason people are staying renters because they're like going, I can't afford the new prices, I can't afford this payment. I could get the same house to live in, and I have flexibility to move whenever the lease is up. And so that's basically what we're looking at is that the difference between 1845 and $1,700 a month is like almost $1,000 more to buy as a first timer home buyer as opposed to renting. So that's the gap we fill. Of course, this is our chart. This is a fun chart. This is your cash flow situation. We like great deals, which means we don't want to go too much into low end properties because cash flow is great, but hassle's huge. And then appreciation is not as great on low value properties and liquidity when the market turns those low. I'm talking about like really low value property. They don't sell. So we're the median price is where the good deals are, and the great deals are lower than the median price. So that's kind of where we stay. We stay in this nice dark gray area where you've got a combination of good liquidity, good appreciation, lower hassle factor, and though lower cash flow, it is a lot less headache. Okay, where are we going to buy? That's the whole thing. Where are we going to invest? This is where one of the areas we've been investing for several years is New Braunfels, Georgetown. Well, New Braunfels is San Antonio area, and it's a northeast suburb of San Antonio, and it's one of the fastest growing cities in the nation right now because it is so cool. There's so much to do there. It's a small town feel, but has all kinds of amenities, and it's affordable and it's very family oriented. So, San Antonio is a big city. Those two cities, San Antonio is the number seventh largest city in the nation with over 2.3 million people, and Austin's at 2 million people, being the 11th largest city in the nation. They're actually combining because they're only 60 miles apart. So over the years, they're going to converge like a Dallas Fort Worth, and so that's what's happening now. And Georgetown is where I live, and that's in North Austin. And it's also the northeast suburb of Austin that people are moving to get out of Austin. So because it's more family friendly, there's a lot more things to do. It's not as crowded. It's got a lot going for it. It's very scenic and what have you, and it's close to all the major employers. Also, North Texas. This is a market that I've been going into. I know some of my clients are wondering when I was going to go into different markets. And right now, I've felt the time was right to build a team in the Dallas area. And one of the reasons we hadn't been in there because most all the builders didn't do investor sales for several years. They're loosening up now. They need to sell their properties. We have a national shortage of homes for people to move into. We have a local shortage of homes to move into. So we're looking at the McKinney area and North Dallas, and that'll be for another presentation. So keep an eye out. I'm going to be going to Dallas um, for a conference, and I'm also going to spend the whole weekend, Labor Day weekend, researching. Do what I do: research the properties, look at the neighborhoods, find the best deals, and that's kind of I'll be presenting that to our clients as we move forward. So keep an eye out for your email to make sure that you're able to connect with me when I open up that market. So back to sharing. Okay, so this is New Braunfels area. What a great little house, 1,400 square foot, 3.2 for under 200,000. We've closed several of these in the recent months, and actually, I've closed over 100 houses in the New Braunfels, San Antonio area. It's a big market. There's 42 subdivisions with just one builder, and you got to know where to throw the dart, and that's where my expertise comes in. You can't be, not all of them are the great place to invest. This is Georgetown. This is in Woodfield, in Georgetown, and that's a 299 now. So we're actually back to pre-pandemic prices for Georgetown, one of the other fastest growing city in the nation. Actually, last year it was ranked #1 fastest growing city, thanks to people leaving Austin to get away from the rat race. But yeah, Georgetown for under 300,000 is new. I haven't seen that in 5, 7 years. Then Temple, Texas, still one of our great medical communities. Got lots of distribution facilities, huge hospitals. Been a real big boon to us and to our investors. I got there, started in 2017, sold over 220, 230 houses, and some of the people on this presentation right now have bought homes from me here. And so this is about 240,000, 1,700 square foot, brand new 4 bedroom, 2 bath. This particular house comes fully loaded. Everything's included, including washer, dryer, refrigerator, blinds, um, the backyard sod, grass, everything, sprinkler systems all the way around. Some of the other homes that we sell don't have all those in place. So great value in Temple, Texas, just north of Austin, about 40 to 50 minutes north of Austin. And that's been a really, I own a half dozen properties in this area, and they're done very well for me and my clients. All right, then now we're going into also looking in. I'll have all this information by the end of the month, so stay tuned. McKinney, Texas, which is in North Dallas area, where the huge high tech is presence as well. I've been asked for this for years. Do you work the Dallas area? You know, we were too busy in Central Texas to worry about North Texas, but now my clients keep asking for it. I'm curious. I want to be able to get in there and get a lot of these areas are getting sold out. They're running out of land. They're selling them. They don't have enough development. So there's windows of opportunity before they sell out. But this is your typical price point. And the rents in all these homes are pretty standard. Like in Austin, our $300,000 houses are going to be bringing 2,300. A 350,000 4 bedroom, 2 bath like this one will get you about 2,500. And this that's what our property manager said, that this house would bring somewhere between 24 and 2,500. Those numbers work pretty good, even at that more elevated price. Typical of the homes that we're looking at: granite countertops, nice cabinets, a, a luxury vinyl plank flooring, and very well appointed, can lights. They're not really fancy. They're entry level, but they're very comfortable. Certainly not a lot nicer than the first house I bought. And Of course, and having a luxury vinyl plank means you don't have to replace the flooring. It's pretty much it's pretty well set up. So that's good looking houses. And That's why tenants love new houses, property managers love new houses, their owners love new houses. Everything's under warranty. It's fixed by the builder. Even granite countertops in the secondary bathrooms. So that's a lot of house for between 200,000, 250 in some market, and 300, 350 in the other markets. All right. So part of what I do is I have a network of help that I plug you into if you become one of my clients. And if you don't have these already, we help you with every one of these, because you want all these trades, all these professionals to be specialists in the real estate realm. Not every CPA or tax advisor is a specialist on real estate. And to start building portfolio real estate, you can't use H&R Block. You got to use a CPA, because there's so much to it, and there's so many benefits you can overlook if you don't do it right. Insurance has always been a big one. We're constantly looking for good insurance. Of course, everywhere we've had issues with the prices going up and coverage being not dropped, but lowered. So that's just a challenge. They're not going to go away. We will have insurance. We have to pay a little bit more for it. Attorneys, if you need them for 1031, deferred exchanges, whatever, we have got all that. Lenders obviously are totally involved. I used to own a mortgage company for many years, so I'm pretty much an expert at financing as well. Property management and leasing, that's the key. That's key. And we have a property management company, and we have about 3 others that we work directly with, that we've been working with for years, to be able to cover the areas the amount of areas that we are working. They handle all and the builders. That's The builders, the on-site agents, they're the ones that feed me the deals that nobody else can see because they know I've got a buyer waiting for them. And so the builders, we build great close relationships with not only management but also with the on-site sales agents because they're the point people, they're the point person. And then trades. You wouldn't have to worry about trades. Your property manager handles all that, but we are always constantly looking for good trades. Kind of probably if you've done a presentation, seen a presentation of mine, you've seen it's kind of the same thing, but with a different graphic. That you're in the middle here is a multi-million dollar real estate investor. Many of my clients are multi-millionaire real estate agents or agents, um, uh, clients. They've done very well in real estate. Maybe a big or small part of that, but I'm glad to be a part of it. So I'm in the mentor consultant part of this, your inner circle, and we've got other people we connect you with. And then, of course, you got your support circle, which would be other agents that we work with, accountants, property managers, contractors, attorneys, lenders. And then property managers are really important. They control that outer circle. And we're always constantly working with making sure we optimize our property management. And we help lease any of these properties that we sell because we have a budget to help with getting them rented. Because that's the key. The biggest concern people have is a vacancy. And so we help them with that. Okay, here's where we're at. We've been doing this pretty similar for many, many years. I mean, I've been buying and owning new construction homes since the 90s, actually since the 80s. It's always worked well over the time. And then what we do is you 1031 them if you want. And, that's what a lot of clients are doing. They're taking the one that they have some appreciation and they're buying three more through a 1031 tax deferred exchange. And so those same people, for instance, we have turnkey homes. So first, we have new construction at wholesale prices because as the builders get close to their quarter ends and year ends, they really start deducting prices low as 15 to 20% below the retail price. I'll show you that in a second. Then you got turnkey homes. These are homes that are already owned and managed and already have tenants in place, and they're like people that want to move on. They'd rather sell it to another investor because they don't want to deal with kicking the tenant out or anything like that, and because us as investors love tenant occupied properties. That's kind of what we like to put people in. So some of them are portfolios as well. So we have as many as people. I've got one client. In fact, she's got three properties right now. They're all occupied. They're all in the Temple area. They're all less than 7 years old, 5 years old, and that gives you like a multi-property, and we can actually combine that with several other people who said they're willing to sell, but they're well, basically pocket listings. So if you want to explore that, I can definitely talk to you about that. We'll have a list pretty soon of being able to, the ones that have expressed interest in the addresses and all the information. And that's where we do our 1031 exchanges. After 4 or 5 years of this appreciation growth, maybe 20 years, like one of my clients, you sell it, but you don't want to pay taxes on it. So you just 1031 exchange it into more property. And then the multiple high growth markets. So that's where we kind of focused on was Austin, Georgetown. Hadn't been really big on Austin in the last 3 or 4 years just because the impossibility of getting homes until now recently. It's been lots of inventory, lots available, and investor friendly. Georgetown, obviously, San Antonio, New Braunfels, talked about that. Temple, Belton, don't do much in Killeen, but I put it in there because people are familiar with that, where that is. And then North Dallas, McKinney. And once again, 12 to 20% below market if you get them on your fiscal quarter. I'm going to show you that here in a second. NFC builder financing at 5.25%. That's 30-year fixed. The builder pays for that. It's not added to the price. It's part of their margins that the discounts that they offer, and they also offer a couple points on closing costs as well. Different builders have different programs, so they have different levels of incentives. So that's me too. I've got to go find out which builder, even which neighborhood has these particular incentives, and that's where all this years and of going through every builder and talking to them and building relationships, it really cuts down the acquisition time. So my deep dive email, and that's something if you've worked with me before, or maybe you're getting the first thing I do when we built a relationship and they really want to move forward because they have a passion for real estate, they just want some help, is I send a deep dive email that has a description of the opportunity, a macro and micro media content. So not just me talking about how great this particular market is. We're talking from PBS down to local newspapers, down to my own webinars and content, articles, very much always looking at the research of what's going on in these markets. So I help you with the property selection and contracting steps, and then I also walk you through the do's and don'ts because there can be a lot of pitfalls if you don't do it. For instance, choosing the wrong property manager is a shot in the foot. And so we really want to make sure that we get you the right property manager, plug into our system. You want to plug into our system because we have a system. Couldn't have sold 500 properties since 2020 as a small team without having a system in place. And that's what you plug into when you work with me. Not any realtors at all have that system and nor those contacts. You get a pro forma and a rental analysis and an inventory sheet. So I'm going to kind of break those down for you. Here's this is an inventory sheet that we get. Actually get about 4 or 5 pages of this single spaced. I just throw this out here from a San Antonio. West side is we like the west side of San Antonio because of the school district. We also look at the tax rate. Tax rates running anywhere from 1.3, with the average being about 1.8. And then we've got some higher ones, and we kind of stay away from the higher, like 2.5% tax rates. That's why it's on there, so that we can run our performance and make sure we've got the right numbers. Then you've got, this is kind of a chop up, the performance on one page, but I've blown it up on these on each quadrant. So basically the price, the rent, and then after all the math is done, you're looking at a cap rate of 5.46, which is really good for new construction anywhere in the United States. In fact, I kind of challenge you to find new construction in something of a quality area like this for as low as 200,000, like we're selling here. So then you got the breakdown of all the numbers here. Also some the taxes, insurance, HOA, managed fees, maintenance, and all that. Broke all that down. We roll it over into you're looking at the loan amount of 155,000 with 25% down, payments 1234, rent around 1595 after expenses. You're looking about $200 positive. Now it's not going to get you rich, but it's definitely nice to take that 200 positive and either put it in your pocket to be tax free because it's covered by the depreciation, or pay it towards the balance, pay it towards your to your loan balance, and pay this house off in 15 years rather than 30. And then this is part of the chart too. It's kind of a little bit, it's just a 5% appreciation based on the money you put into it at the beginning, not counting for any raise in rents, not counting for any lowering of interest rates. Just the return on equity based on a 5% appreciation over time. And you can see between year 3 and year 4, you've had 100% return of your original investment. I mean, obviously that changes depending on markets and timing and all that kind of stuff. But over time, you look this down 10 years down, it's 326% return. And you didn't really have to do much for it because the value of the loan went down and the property went up. So what to do? Give me a call. There's my phone number. My texting actually, as of today, is not working. So I'm going to the AT&T store after this meeting, find out what's wrong with it. So give me a call. That's my phone number. Or right now, also email me at ken@byaustin.com. I also sent you an email that has my email. What you don't want to do is don't call the 800 number or inquire online, a builder's website, because you'll get some random agent doesn't know what we do, and they'll assign you to another. They don't have the information that we need. We work with one good on-site agent in every market so that we have one-stop shop. Don't try to figure it all out. We've got a proven system. Don't try to go out of the system otherwise, and we can tell you nightmares after nightmares if you try to cut costs, save a little bit of money, say on property management, and find out it was a bad deal. And don't wait too long because the prices are going to go up. I mean, we're at bottom. It's rates go down, buyers come into the market. It's going to continue to go. This is a great time to snap it up. Gives you opportunity you don't have to feel so rushed like we used to have. So that's it. You're looking at, give me a call. And then we're, available. I'll introduce you to everything that I do. I'm big on education. I love working with my clients, getting referrals and helping their friends and their colleagues. Also, a lot of people on this call are my friends and clients. So want to thank you guys for attending my minute. I'm only 3 minutes over. That's not too bad. So I just wanted to see if there's any questions. Okay, hi Vlad. Um, yes, 10 years ago. Okay, I'll talk to you. I'll give you a call. So Vladimir bought a home from me 10 years ago. So he wants to talk about some options. Anybody else have any questions about what's going on in the market? Yeah, time flies. Yes, it does, Vladimir. Yeah, it's time's going very quickly now. I'm 61. So I plan on helping people. Yeah, I'm not going to retire. So I'd love to be able to help our clients be able to. We build portfolios. Right now, I have 13 properties. And so, I've bought and sold over 100 properties. I wish I kept them all, of course. And so my goal is 40 properties, 40 doors by in 10 years. So that'd be 40 doors. I'm looking at if they're paid down or whatever. I looked at the cash flow would be about $25,000 a month. So, I'm about a third of the way there. So that's kind of nice. It's kind of neat to see how we build that up over time. And really, it's buying one a year, two a year, building it up over a year, over so many. When you get to your whatever number you want to have, my first goal was 20 because you can get 20 loans between husband and wife. Now I'm up to I'm already at 10 loans, so I can't get any more, but my wife can because she's on salary. So yeah. Anyways, anybody else have any more questions before we sign off here? You can reach me once again, Ken. Kenn at buyaustin.com. That's my email address. And also, my phone number is 512-423-5626. Please call it right now. Don't text it. If I don't answer, I will call you back. But by this evening, I should be able to have that worked out, hopefully. And really do appreciate you taking the time. Like I said, a lot of people on this webinar are our clients of mine and friends. And then I appreciate the new clients that have um, that have joined here to get to learn a little bit more about real estate. I see got Debbie and Derek and Erez and Marcella with the Ultimate Banking. Just talked to my Ultimate Banker today. And Mike, thank you so much for your referrals. You've been a blessing for sure with so many of your family members buying homes for us. Michael, nice to meet you. Rashida, so much glad to be talking again. Steve, I don't know if we've talked before, but I bet we have. And Vlad, it was great to talk with you. Hopefully, and connect with you on that. Thanks with my last exchange from mine. Um, you're welcome, Mike. Once again, you've been really a bless. You played the game right, and it's getting rich consistently. It's not getting rich quick. It's building wealth over time consistently. This is not rocket science. I always tell people if I can't make the numbers work on a napkin, and do the algebra on a napkin, then it's too complicated for me. This is not complicated. The complicated part is knowing where and what to buy and when. And so that's my specialty. All right. Yeah, appreciate your help. Thank you so much too. Thanks, Debbie, for the great info. Appreciate that. Anybody else have any questions before we get haven't any questions? So hopefully there's some interest here. So yeah, reach out and give me a call, and I can kind of share you whether it be a turnkey portfolio of homes or a brand new construction, which is kind of our bread and butter, and also talking about the potential of North Dallas. A lot of my especially my tech workers, because it's such a big presence. Texas Instruments is building a massive facility in Sherman, Texas, which is about 40 minutes north of McKinney. It's going to be eventually a $42 billion investment. Right now, they're about 16 billion into it. So that's huge. Texas is becoming this big tech, state. So you have, Temple, Texas just got a big meta data center, $800 million data center. I know that doesn't, it's not a huge amount of jobs, but it put Temple on the map for tech and for reasonably priced industrial land that they have up there. And then, of course, Georgetown and Austin being the tech hub. Samsung just made a deal with Tesla for $16 billion worth of next generation chips for all their cars. So, you know, it's with all the tech coming here and the nepotism between Samsung now and Elon and all the stuff that Elon's doing, and like it or don't like it, bottom line, it's probably not going away. And so it's a great opportunity. Like I said, the city is great. It's vibrant. It's the 11th largest city in the nation. I've been here for 30 years. And I love actually the suburbs because that's where people live and want to live. Well, thank you guys for taking your time. I know we're busy people, and I wanted to make sure that we made this concise and was valuable for what you were looking for. You want to reach out anytime, I'm available. And hope you have a blessed day. And stay, if you're in Texas, like a lot of my clients are, stay cool. If you're in California, enjoy the beach, and we'll talk to you. Oh yeah, once again, I'll be going to Dallas at the end of the month, and we'll be coming back with a nice little banquet full of basket full of potential properties to present to my investors like you. Please sign up. Send me your email if you. I mean, you got my. I'm sure I got your email address, so you wouldn't have got it. But if you have any questions, give me a call or email at ken@byaustin.com. Thanks, guys. Appreciate y'all.